Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room once again. We are getting a lot of volatility this morning as a consequence of Fed Governor James Bullard pretty much making comments about interest rates, with the idea that interest rates could be going up according to the current inflationary situation that seems to be developing here by the end of 2022. So it's bringing the market a little bit of a correction here. Let's take a look and see here what's going on with the metals and how far this thing is going to go. Let's just keep an eye on this here for a little bit. We're looking at gold trading 1771.30. And the daily numbers here for today are on the left of the chart. You see the average price of 1790. You also pretty much see that the market traded above that by activating a bullish trend, a price trend momentum, but it closed below during the announcement of James Bullard, with the expectations possibly that interest rates might be going up here at the end of this year. It's given the US dollar a short-term boost, and obviously bringing the metals markets into what appears to be the extreme below the mean. Now, the data for today that we're looking at is the average price is 1790. The extreme above that average price is 1811, and the extreme above the average price of sell 2 is 1848. Below the average price, we're looking at 1753 as the buy one level. 1753 to 1731 are the targets that have been activated in the gold market. As the price is coming down here below the average price, it's activating a bearish price trend momentum and automatically activated the target above of 1753. Now, it doesn't have to necessarily be the case that the market will guarantee to complete this target. The market will tell us that. And so right now, mathematically, it's telling us that the market is in a bearish price momentum. The target activated is 1753. And this bearish trend momentum will be negated on a close above 1790. I want to take a couple of minutes here to thank all the comments of my new subscribers here that are joining me every morning here at 7 a.m. Pacific Standard Time. I appreciate all the comments. And what I do here, just to clarify what we do here a little differently here, is pretty much take the intelligence that is reflected in the sentiment out there, in it, it's reflected currently in the internet and headlines, and primarily in the social networks. And One of the things that, again, I do here differently is that I show you in a live trading account how to take that intelligence, how to dissect that intelligence, and how to put it in the right place in relation to the variable changing price momentum indicator. The VCPMI is not a fundamental program. It's primarily a mechanical program. It's primarily a mathematical program. It's an algorithm that essentially was written in easy language in C++ in TradeStation. It is a real algorithm that runs on an automated basis, and we been able to code pretty much over 80 different markets. Pretty much across the board. Let me just clean this up here a little bit so that you can see the magnitude pretty much of the coverage that we do on a daily basis, completely automated. Now, we cover approximately over 80 different markets, from virtual currencies to stocks, ETFs, double X, single X. And we do it to simply create a landscape of algorithms across the board, but it doesn't necessarily mean that I trade every one of them. What I choose to do and what I suggest to my subscribers here that come into the room, pretty much if they want to see how I apply this intelligence, this information here, I follow a very strongly systematic process that I apply in being able to identify pretty much the type of trading instruments, the type of trading markets that I want to trade. And obviously taking into consideration the current situation economically, politically, globally, the markets or the sectors, you might say, that I feel have a tremendous potential outside of the stock market is trading in precious metals, trading in monetary instruments, trading in gold and silver in particular. You know, I think when you take a look at the fundamentals and you just listen to all of these experts in the cash market making comments on the short squeeze, the problems that we're having with obtaining right now physical gold, physical silver at a reasonable price, the market has reacted completely the opposite in the paper market, which is what we trade. And on the basis of all of this tremendously bullish fundamentals, even as a consequence of the pandemic in 2020, after the market made a high of 2089, what we saw was a correction. And it actually was counterintuitive of pretty much the damage that was done and the expectations that this pandemic had done tremendous damage. So the gold market discounted that data, and came down to make a low of 1673 from a high of 2089, coming down to, on the long-term chart, was a perfect Fibonacci 61.8% correction. And what we saw here was, again, a double bottom testing of this, and the market rally on this first leg. Now, breaking through this trend line here was very bullish. And the market got up exactly to where it's supposed to, according to, if we take a look at the weekly data that told us coming into this week that you want to sell into this 1900, 1921 area. And this was regardless of any Fed meeting, any comments about interest rates. The market came up and tested this level of what the AI calls distribution of supply, and reverted from those levels. Of course, what I did not expect, and I don't think anybody expected, was the reaction that we had after Chairman Powell comments on interest rates. And so, with regards to the market in gold, what it's doing, it's basically trading the sentiment, the bullish sentiment. The bus was too crowded in the last couple of weeks. If you were to analyze the sentiment of the market in gold, we had an extremely bullish, optimistic sentiment. And coming up to the 1921 levels indicated the market got a bit overheated. And we saw a lot of supply come into the market, which is really what the AI of the algorithm tells us. Whenever we get up to the red levels, as you see here, it recommends that upon taking the targets, completing the targets, which we did, of the sell one of 1900, and we got up to a 1921 level. 19 and a quarter was close enough to complete the pattern. And obviously the announcement of or the comments, you might say, of the Fed's meetings here is what. No, actually, there were no comments, and this is what gave the market a reason to sell off. And we saw a massive sell-off across the board: commodities, grains, copper. I want to take a look at soybeans. Most commodities, metals had a major correction as a consequence of his comments made. But let me come back here and tell you now, basically, the strategy that I am applying, taking into consideration the current environment, and also, pretty much what I'm recommending my traders in my private trading room to do as well. We have a private trading room that essentially is open 23 hours a day, and we are constantly updating on any developments that go on and any trades that we do. We document them here and show you pretty much how we are applying the same strategy that I'm sharing with you guys here during this live streaming. Again, the difference here in terms of what you see, what I will do is that I pretty much am trading live, executing the signals. And, for the benefit of you guys that are just coming in here, what I would suggest is before you decide to jump on to take the signals in a real live account, that you follow me in a simulated account for a period of time. I recommend that because then you can get into sync with the signals that are being produced, and you can see the results in your simulated account if you are in sync or not with the signals. It's a systematic process that does not involve any emotional judgment if you simply follow the mechanics or the systematic approach of executing. Coming back here to the market, we pretty much are in a neutral to bearish signal in the gold market until the market trades above the average of 1790. Or it comes down to complete the target of 1753. A close above 1790 is going to activate the levels above. And on the daily levels, obviously, we're looking at 1811 to 1848. Now, what I want to point out to you here is that if you take a look at the daily 1848 level, on the right of the chart, you're looking at the weekly level that we are still working this week as we end this week, which is the buy one level of 1851. 1851 to 1848 are pretty closely related. That's what we call a harmonic alignment, a almost perfect harmonic alignment. So, we are in a neutral to bearish sentiment right now. The market not quite came down to 1753, so there is some buying higher at higher levels. And what we want to do is pretty much allow for the market to resolve itself here. As I said, either go through the average of 1790 or come down and activate the buy one or buy two levels. Outside of the comments made by James Bullard, St. Louis governor, Fed governor, the market was up quite a bit this morning across the board. And we still are holding on to some of those gains in palladium and platinum on some of the markets that took a beating yesterday. So how I am approaching this market is basically in three different ways: short-term, intermediate, and long-term. Short-term, we day trade the futures markets whenever there is a signal in the futures markets, and we try to adhere, and I try to recommend my traders basically that you go home flat. If you're day trading and the futures, have the discipline, right or wrong, to go flat at the end of the day. Don't convert your day trade to swing or position trades. Be disciplined about following your risk management. And so the first thing is that the futures using the VCPMI gives us a direction of the market on a daily basis. And it also integrates, obviously, with the weekly signals that you see. Excuse me. And I'm using this chart here, which is a simulated platform in Thinkorswim, because first of all, it's a great platform, and I'm able to manipulate the data a little differently than the linear version, you might say, produced by the algorithm, in order for me to see how I, as a self-directed individual, can take advantage of the situation. And what I look for is basically the harmonic alignment of the daily, weekly, and ideally yearly, monthly, annually, and the long-term direction of the cycles as well, as we expand in terms of time frames, all the way up to the a 9-year cycle, all the way up to the 90-year cycle. Coming back to the gold market short term, there is no trades, basically short term. I continue to hold on to my long core position as the noise settles down here. The market is going to begin to realize that regardless of interest rates, the fundamental situation is very bullish for the precious metals, and it's not necessarily just about the inflation pressure that we have as we move into a new economy and the velocity of money is higher than expected, the growth is higher than expected. But we've been in a lockdown for a year, and so I don't think it's unreasonable to expect aggressive growth initially. You know, the question is, I think more importantly, to see what the markets are going to do here as we come into the second and third quarter of this year, where we basically see a lot of government subsidies terminated, and people actually may have to go back to work, may have to start looking for work. So there are a lot of still uncertain things that need to be resolved in the fundamental area. And so I come back to the gold market as a currency. One of the reasons why we've had this tremendous rally in, for example, virtual currencies, and we're taking a look at Coin, which is the virtual currency application where you can trade currencies, and it's the exchange, more or less, where the virtual currencies are executed. It's going to have a lot of growth here as, once again, people are looking for alternative investments away from the US dollar. This tremendous need to have virtual currencies, to get away from the status quo, so to speak, of using the US dollar as the world's reserve currency, is being tested. Bitcoin, gained tremendous market share, and it's become a virtual asset that you got to reckon with. I look at it as a virtual asset that is tremendous to trade, and essentially it gives us the opportunity to go to take the volatility and trade the volatility, basically. I'm going to continue to update you here as we go out throughout the day here, and I want to recommend for you to continue to just be patient here as if you are in the in metals and gold and silver. We got a little bit of volatility here in, I think, consolidating down here for a little while after such a tremendous sell-off here. It's probably the right thing that we want to see, and it's actually very good for the market. As I believe that this level here is a tremendous buying opportunity on the long term, even on the intermediate term. Continue to hold on to your position here, long-term core, and look for any corrections, any opportunities like we saw here yesterday to add to that position long term. In the meantime, have a great trading day, my friends. Here I will continue once again to update you on my private trading room here in Discord. And thank you again for the opportunity to share this information with you here during this live streaming. We'll talk to you later.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.